Hi, folks. So to jump right into things, yeah, this is the Bitcoin DeFi talk. We're joined today by some lovely people building some lovely products, and I'll let them introduce themselves.
I can kick it off. I'm Sid Powell. I'm the CEO and co-founder of Maple Finance. We're an on-chain asset manager. We do over-collateralized lending against Bitcoin and other large caps, but we've also been growing a Bitcoin staking product this year, which works in partnership with CoreDAO. And what this looks like is you deposit BTC, we run a staking strategy, and you get back BTC yield. So we've been doing that since February this year.
Everyone, my name is Maclane Wilkison. I'm one of the co-founders of Threshold Network. Threshold Network is the home of TBTC, which is a trust-minimized, permissionless Bitcoin bridge and synthetic Bitcoin asset that you can deploy into DeFi on multiple chains. Most of the liquidity is on ETH-L1, but we're on a lot of EVM L2s and increasingly non-EVM chains as well.
Hey everyone, my name is Jacob Phillips, one of the co-founders of Lombard. Lombard is a Bitcoin liquidity layer, so you probably know us from LBTC, the leading liquid staking token. But we're building out a full suite of middleware to connect Bitcoin to existing ecosystems, ETH, Solana, Sui, you name it.
Great. I'm Brendon, one of the initial contributors at Core. I currently head up Core Ventures, where we're backing folks building new utility on Bitcoin. Core itself is a leading L1 blockchain. It's EVM compatible and secured by Bitcoin, specifically Bitcoin stakers, which we'll get into detail soon, and then miners who delegate hash rate. And then on the other side, we have this Bitcoin staking product that's part of Core's consensus. Users can time lock their Bitcoin and earn yields, and there's a lot of great folks, including Maple, building on top of that.
Awesome. And so for today's panel, I just want to say that I'm going to throw questions at these lovely folks, and some of them will answer, or sometimes we might do like a round robin type of situation. And so just keeping that clear for everyone here. So to kick things off, each one of you has stated what you're building, and so I want to start things with, why do you think you can capture the demand for Bitcoin with what you're building specifically? And do you think that, I mean, obviously you do, but do you think this is the most optimal way to capture Bitcoin's demand this year?
Sure. So I mean, the way we think about TBTC is TBTC's core value prop is just to be the most trust-minimized Bitcoin bridge in the market. So we want people to feel confident basically deploying their Bitcoin into DeFi on the chain of their choice, into the ecosystem of their choice, being able to use whatever protocols they want to use, whether it's lend, borrow, yield farming, LPing on dexes. We just want to give you the tool to do that and to have confidence that that Bitcoin and that collateral is going to be safe. So that's basically what we think about every day, is just how do we make sure that TBTC is maximally robust from a custody standpoint and a security standpoint, and giving people the tools to deploy it how they see fit. So we're just sort of the underlying infrastructure and liquidity hub that just sort of gives you access to DeFi with your Bitcoin.
I can give probably a non-technical answer. Like if you look at our folks, what they want is a simple solution where they can get Bitcoin yield on Bitcoin. The problem we're solving for them is that there's not a lot they can do with their Bitcoin today. And many of these guys who are clients of ours have been holding it for years. So what we provide is a product where they give us Bitcoin. It's not a taxable disposal, so there's no tax complications. They get a yield back in Bitcoin, so we manage all the points, conversion, we manage the hedging, and we manage all the staking. So for us, it's simplicity. It's the fact they can keep it in a custodian, and they're not going to get slashed on it, and it comes back in Bitcoin. So it's just very simple. Bitcoin on Bitcoin yield.
Yeah, and I think Lombard's thesis it kind of goes off some of the things that Maclane was saying, and I think of it as like, at one point in time in the ecosystem, centralized exchanges and venues like Celsius and BlockFi and centralized exchanges served the Bitcoin ecosystem really well. You sort of didn't need Maple or staking because there was great yield on off-chain venues. As that all dried up, now all of a sudden new players have entered the game and kind of taken it by storm. So staking in a lot of ways was a means to an ends for Lombard. We started off with the thesis that this would be the catalyst for onboarding Bitcoin into DeFi, and sure enough, that came true. I think we went 0 to billion faster than any other yield-bearing token had ever done, and I mean, liquid staking and Babylon deployments, I think, scaled up to, you know, billions on chain, and I think like 6 or 7 billion in capital staked. All of this Bitcoin that was desperate for yield the entire time, somebody just finally gave it away to do it in a non-custodial manner. And then now all of our focus, I think, has shifted to helping people use their Bitcoin in whatever application they want to. So in a lot of ways, like, you know, I describe Lombard in my intro as middleware because we really are that sort of bridge between Bitcoin and any application on ETH, Solana, Sui, or wherever else. I think, you know, builders want to build, rather, the best builders on the best chains want to build with Bitcoin. They just sort of need the tools to do it.
So I'll be pretty quick. We also need to get TBTC, LBTC on core. Let's go. Let's lobby these guys. I know the discussions are happening, but we come from it from the chain side. So we fair launched 2.5 years ago. We were one of the first to do so. The thinking then was Bitcoin's got this amazing security budget. The network itself is super secure, but you can't do a whole lot with it. It has very long block times. And we also thought the vision was meant for more. So at the end of the day, we want to build a chain that has a bunch of these Bitcoin DeFi use cases, but we need to meet Bitcoiners where they're at. And historically, you've been able to bring Bitcoin on chain, but the yield opportunities have been abysmal. So people don't really want to take on the risk to get these kind of low yields. So with you know, innovations like staking, and you know, there's a couple out there, we think that that's a good first step, you know, to bring a native yield to Bitcoin for the first time, meet them where they're at, and then eventually we kind of see people leveling up and eventually having a long-term DeFi economy where they're putting their Bitcoin to work on chain. And we think there'll need to be side chains or scaling chains dedicated to be able to do that for Bitcoin.
Awesome. And so I want to tap in on this, on the demand of Bitcoin more, and tap in on it more on the institutional side. This past year, we've seen Bitcoin become a treasury asset for many different companies, right? And I know that quite a few of you are able to probably service these companies in some way. And so my question here is, like, do you think these treasury companies will continue to grow? And do you think more of them are coming? And how do you see them as changing from a passive company, just like a company that holds Bitcoin, into something that uses it as a more productive asset?
I think you'd be silly to say there's not more coming when we see an announcement every couple of days. But I think that, you know, you're going to hit a point of diminishing returns. The 15th company that's doing Bitcoin treasuries is not going to make the same impact as the first 3. Where I think you'll continue to see them is that they can act like a vehicle for retail exposure to Bitcoin in jurisdictions that don't already have an ETF. So I think you'll continue to see more crop up that are in you know, far-flung countries where they don't already have an ETF product. But I think ultimately the way we look at them is that there is going to be competition between them. If you are the 15th Bitcoin treasury company in the US, you better be doing something to differentiate yourself. And that's probably going to be earning a return or earning a yield on your treasury holdings. And so I think they're going to eventually turn to staking and DeFi strategies in order to produce that. And that's how they're going to try and stand out from their competitors. It's just competition.
Yeah, I think that's generally broadly right, and I mostly agree. I think, like, you have to delineate between the types of companies. You're going to see different Bitcoin treasury companies engage in different types of behavior. Like, if we take the most obvious, notable example, I expect, even if there was theoretically a fully trust minimized or trustless Bitcoin bridge to DeFi today, you wouldn't see MicroStrategy putting, you know, billions of dollars of Bitcoin into that bridge. I think that's just not aligned with reality, at least for the next few years. That said, you know, the longer tail of companies are going to be doing more exotic things. You know, I expect for TBTC, that's where we're going to see a lot of our growth over the next year is going to be coming from the institutional side increasingly. And I think that's where a lot of the growth, not just for us, but broadly for the Bitcoin DeFi industry is going to come from in the next few months.
Only thing I'd add is that it's very clear that these are you know, semi-unsustainable products, and a little bit, you know, this is kind of V1 of the evolution of, you know, institutional Bitcoin, or maybe V2 after ETFs, but maybe V1 of like the Ponzi that they're trying to create here. And all of this to me is just massive indication of institutional demand. And the second, more sustainable products come in to sort of replace that demand, you'll see things start to flow on-chain or into more sustainable vehicles.
Yeah, I think that's an interesting point. Yeah, I think we'll see a few key winners in every market. We've actually funded a few at ventures. Some have these regulatory reasons that someone will win in Brazil, or we've already seen Metaplanet win in Japan. So I think we'll continue to see that trend. And I think to Sid's point, they're going to want to differentiate somehow. They're trying to replicate strategy, but strategy is just so far ahead. So we've seen kind of like some service businesses where maybe they'll build some cool DeFi apps, but frankly, I'm not that bullish on that. I don't think that's a very different business than hodling Bitcoin and having like a CIO. And then I think the other point is they'll look for yields, right? And I think similarly, they may not come on chain day one. There's probably a bit of skepticism, but eventually I think they will. I think to start, they're going to look at safer options like staking. We're definitely talking to a variety of these folks already. I'm sure other staking platforms are, and that's a huge opportunity to differentiate. And then for us, we're working on a pubco. This is already public news. One that holds Bitcoin and Core. So we have this dual staking mechanism where you stake both and get higher yields on your Bitcoin. So we're excited for these pubcos to actually hold Core on their treasury yields and monetize their treasuries. Or they'll use services like what Maple has. I'm sure they have a great pipe of these treasury companies as well.
I do like Jacob's point that this is clearly not sustainable, like particularly the levered Bitcoin treasuries. Like I'm not a trader, but if I was a trader, like the trade of this cycle is deciding when you think it's going to flip from these companies hoovering up Bitcoin to that starting to unwind and them getting liquidated and starting to puke up that Bitcoin onto the market.
You think they'll consolidate? Like there'll just be mass consolidation after Bitcoin's on sale?
Well, if they still exist.
What's maybe kind of interesting about this is that we're seeing innovation in Bitcoin, mechanics happening off-chain instead of on-chain. I feel like we saw this same cycle, the same sort of, it would have been crypto economics, but I guess it's just these same economics on-chain with stuff like Ohm in the ETH space before institutions came on board, and now the same types of people are thinking about them, but they're thinking about it for equity markets instead of like tokenized products on chain.
Awesome. So I guess I want to tap on a separate subject now, separate from the treasury assets, and that's wrapped tokens. That is, wrapped tokens are another important way for people to take advantage of Bitcoin yield on chain. And over this past year, we've seen the decline in dominance of wrapped Bitcoin, and we've seen like new exchange tokens. I think one of you alluded to it earlier. So like Coinbase Bitcoin or Kraken Bitcoin, right? And so for the folks here that have their own like Bitcoin wrappers or Bitcoin variants, I should say, so like TBTC or like Core BTC, et cetera, where do you see yourself fitting within this niche, and how do you see yourself like taking advantage of the decline in dominance from other tokens?
Yeah, I mean, I think it goes back to how we think about TBTC is we just want to be the most robust, trust minimized, and permissionless Bitcoin bridge and Bitcoin asset that you can deploy into DeFi as possible at whatever the current sort of spectrum of the design space is. It's been kind of an interesting 12 months or so because like the wrapped Bitcoin or tokenized Bitcoin space, has gone from being like very sleepy, where it's basically you have the giant gorilla of wrapped BTC, to all of a sudden being just a ton going on. You have CBBTC, you have Kraken BTC, you have the new like liquid staking tokens. So it's done a complete 180 from how it's been the last 4 or 5 years. And there's been a couple catalysts for that. Obviously, one was sort of this very strange decision to involve Justin Sun in the wrapped Bitcoin custody. The other is this new design space around BitVM and potentially dramatically improving what are the theoretical possible custody assumptions around how Bitcoin is held in a bridge in a much more trustless manner. So it's gone from sort of just WBTC at this like constant level of like 99% market share to a much more dynamic and moving space where I think everything is shifting pretty dramatically.
I think when I first started working in the Bitcoin DeFi space, it was pretty clear that there was this obsession with yield. This was kind of what everybody was focused on. Yield being a means to an end, where the end is utilization of capital within DeFi or utility, effectively. And I think Bitcoin wrappers are one of the, if not the most important primitive in the ecosystem. It's sort of like when you were building stable coins, you took those stable coins cross-chain to wherever the best applications were first, before now we're starting to see the emergence of like stable coin chains or isolated environments optimized for that sort of ecosystem. I think we're in the same state of play right now with Bitcoin, where Bitcoin wants to be used, but it wants to be used in the best products. When people ask me what is the best Bitcoin DeFi product, I usually tell them Hyperliquid, almost a little bit jokingly, but you think about it, who created the best UX? On Hyperliquid, you click deposit, it shows you a Bitcoin address, you deploy, you withdraw from your Binance account, and you're playing with what looks and feels like native BTC directly on the exchange, which is, again, one of the best products in all of DeFi. So the idea that Bitcoin DeFi is going to be competitive in either isolated ecosystems or convoluted ecosystems with fragmented liquidity, low liquidity on chain relative to other assets, like it is on ETH mainnet, where there's 4 or 5 different wrappers, I think is a little bit silly. So going back to the basics of like, we are trying to create great products for Bitcoin. Centralized exchanges are amazing products for Bitcoin. For anybody for DeFi to be able to compete at all, I think we have to like go back to the idea that we're competing with everybody else in the ecosystem, trying to recreate that same UX. And once the DeFi apps start to feel like the centralized exchanges, I think you'll see a lot of Bitcoin start flowing out.
I can go next. If you look how we've tried to position our Bitcoin yield products is we have the institutional side, which is you give us native Bitcoin, so we're not trying to cut out that market. But then we're working with Core to issue LST BTC, so an on-chain yield-bearing version, which the distribution plan is that this would grow through DeFi partnerships. So you could use it as collateral. You can hold it on perps dexes where it's yield-bearing collateral. You can sell it on secondary sales on dexes. Or you could lock it in Pendle and speculate on the interest rate. But I think we're trying to kind of go where we think the customers are. And so there's a set who don't want to do anything on chain. And so they've got the option of just providing native BTC. But we think that you can scale DeFi native products immensely, and this comes through doing partnerships with other significant protocols. And this involves, cross-chain. So whether it's putting LST BTC as collateral in Camino or on Jupiter or on eventually Hyperliquid. But I think in order to capture that market, you really need the mobility of having it be an on-chain yield-bearing asset. And that's probably the most important aspect is the fact that it's yield-bearing makes it very attractive as a form of collateral.
So if I'm understanding here correctly, you folks would say that the V2 for Bitcoin variance on chain is essentially just decreasing fragmented liquidity and increasing like your distribution through different partnerships with different protocols, or
that's how you compete with an existing product. But if you look at the evolution, it was that WBTC had no yield, and so folks like us and Lombard and Threshold are trying to introduce versions of wrapped Bitcoin that have either more utility or the ability to earn more yield on them. That's kind of the V2.
Gotcha. Okay. And so I think this taps into another place that I want to go to, which is ecosystems. Or some of you are very specific to certain ecosystems and have your own ecosystem. So like Core, for example, has its own L1. And then some of you have like a complete like multi-chain restaking strategy going on. So what's on ecosystem level, where do you see things going? Are you prioritizing like EVM ecosystems? What exactly is the plan for each of you?
For TBTC, we're agnostic as to the ecosystem. Basically, we want to provide the rails to every relevant ecosystem. We want to meet users where they are. We don't want to tell them, hey, you should use Bitcoin on ETH1 and you should use it for XYZ particular product. We want to support any ecosystem that has a demand for Bitcoin. And obviously, that changes over time. And I think that's something that we're very focused on, is doing a better job of being very proactive in meeting in expanding to new ecosystems where there is significant demand for Bitcoin, and giving people the best and most straightforward UX rails to do that. I mean, right now, most of the liquidity in practice for TBTC is ETH-L1. That's the most mature ecosystem. That's where TBTC has been live for almost 5 years now. But there's increasingly very significant liquidity on a lot of EVM-L2s like Base and Arbitrum and Optimism. And we're also expanding to non-EVMs going forward. Just launched on StarkNet a couple weeks ago. It's on Solana. And I think there's a lot of other very interesting non-EVM projects that have recently launched or will be launching soon.
I think the way I think about this question has changed a little bit as I spent more time in Bitcoin DeFi. Originally, I would have thought of like distribution for LBTC or Lombard bridge products as purely a game of working with the chains. Like the chains control distribution to the apps, and that's how it'll go. So to start, when we launched, we went big on ETH mainnet, onboarded like $1 billion there, then went to Barachain and Sonic and Base and Sui, stuff like that. And I've had a lot of success in those ecosystems. But the more time I spend there, the more I realize that it's actually the applications built upon the chains that drive distribution. So primarily, Lombard, the way that we're sort of evolving is Lombard's built this, what we call the Lombard SDK. This is our sort of developer platform that really is like putting the tools of the Bitcoin bridge, what you would expect to be able to interact natively with Bitcoin, perform the type of functions you want, staking, yield generation, or just bridging, directly within the native application. In a sense that, like, at the end of the day, people, I think over time, more and more, users are going to stop thinking about the underlying chain and think more and more about the application. They want to use Aave and Drift and Jupyter and Hyperliquid. They don't really care what the underlying infra is. So certainly onboarding a lot of liquidity through partnering with directly with ecosystems. I mean, again, Lombard, like Maclane said with TBTC, I mean, Lombard's fundamentally chain agnostic. The goal is to get this in the hands of the applications that people want to use, and I think that infrastructure is going to continue to evolve over time.
I'll add a couple thoughts, just kind of riffing here. His thoughts have changed because we were on a panel in Dubai, I think, and had the same question. So yeah, I think there's something to that about the apps. Just taking a step back, I kind of want to. It kind of goes back to the last question too. I think it starts with a yield opportunity or a base yield. I think a lot of folks will tap into Core's yield or other yield sources and bring products on multiple chains, such as LSD, and others. Lombard's done it as well on multiple chains. But from there, I think when we talk about ecosystem, we're obviously a chain, so it's a little different. I think there's going to be a couple winners with Bitcoin liquidity that are actually aligned with Bitcoin itself. I think you will see liquidity go to places like Solana, Sui, et cetera. But I think there will be a couple winners with these dedicated vertical chains that are there to scale Bitcoin and bring incentives back to Bitcoin somehow, whether it's staking and giving a native yield to stakers who secure the network, or with miners where we've seen various like merge mining, et cetera, another subsidy to keep the longevity of the Bitcoin network. I think ultimately those are the ecosystems that are going to win on the Bitcoin side. Obviously, I'm biased. And then with that, though, I think it's very important. I think why that they're going to win those is similar to Jacob's point. I think there's going to be more incentive to build a very vertically integrated, awesome product for Bitcoin users, like a really killer collateralization protocol on one of these chains that's seamless and really easy to use, and it's the de facto place to do that. And I think a lot of the use cases, frankly, are collateralization with these Bitcoin derivatives, and I think they're going to live on these kind of side chains or L2s in the future. So I'm very bullish about that.
I think there's two ways of looking at this kind of ecosystem development. One is what applications come to your ecosystem, and so we work with Core. We want to see stablecoins move there. We've seen the beginnings of some lending protocols like CoLend evolve there. But then there's the flip side of that, which is, okay, you have your wrapped version of Bitcoin that's, might be some kind of derivative or might be yield bearing. Can you export that to other ecosystems and use that to kind of reinforce the growth of the existing ecosystem? In this case, what I'm talking about, Core. What that means is you can effectively use the other ecosystems for distribution. So if you have a wrapped version of it, you can put it on Solana, Avalanche, Ethereum, Base, and attract users there. And each of those users reinforces the strength of the core ecosystem in this instance. And so I think of distribution coming from both angles. But I think you have to hit both for it to properly kind of strengthen your ecosystem.
Yeah. Hey, maybe just to respond to one thing that Brendon, right? Brendon was saying was part of the reason I've always been so adamant that Lombard needs to be a bridge, or like users want to use Bitcoin in the big ecosystems already, is because this seems to be where user and developer demand is. Or put another way, when I look at a lot of the Bitcoin L2s, I see very little fundamental difference from using Bitcoin in that ecosystem versus using Bitcoin on like an ETH L2. When I go down the product spec of like trust assumptions are the same, there's not really any different yield mechanics, this or that. But I don't always think it'll be that way, and I know you guys have a fundamental belief on this, I'm sure. So I'd be curious, to kind of talk through like what do you think needs to change for Bitcoin L2s to be like really dominant? Obviously, on my end, I'm thinking like Bitcoin L2s should and will do things net new that like you couldn't. If you can use Bitcoin on L2s Bitcoin L2s in a way that you could not on Solana or on ETH mainnet, then that becomes a fundamentally different ecosystem.
Yeah, I generally agree. I think the thing I would point to is we've had wrapped derivatives for years. We've had wrapped Bitcoin, and it's like a fraction of a percent of Bitcoin's total market cap that's been bridged over, because there just has not been an incentive to do anything other than an Aave market that pays 0.02%. And maybe those opportunities will exist, and you can get Bitcoiners who are skeptical to come over. But the way that we think about it, I can't speak for every Bitcoin sidechain. I think the way we think about it is let's offer a native yield first that kind of changes the dynamics of everything on chain for Bitcoin, because it's never had a native yield. It's a miner-driven chain, right? Everything, all block rewards go to miners. As a Bitcoin holder, there's no native yield. We think of it that way. Build in native yield. That'll then bring these opportunities on chain that didn't exist. The question will become, will they perform better on Solana or something like a Core? We think long term, those opportunities and the builders will come on Core because they're aligned with that mission, but we'll see how that plays out. But that's our long-term thesis over time.
Yep. Makes sense.
And I think the other ecosystems have a huge head start, including ETH L1. But if I look 5-10 years out, I think there's just going to be these dedicated L2s to Bitcoin, which is similar to thinking about ETH. It's like, do you scale ETH on Solana or other networks today? No, you don't. You think of it as these layer 2 networks, and I think Bitcoin will be very similar.
Totally. Yeah, it makes sense. And no doubt many L1s have evolved in the route of sort of creating these esoteric, aligned, kind of strange ecosystems. The Barachains, Hyperliquid is a very unique ecosystem. It wouldn't be surprising to see a very unique ecosystem to develop in the Bitcoin space.
But we'll see how it all works out with all this new bridging tech, OP-cap proposals. It's going to be really interesting to see.
Well, totally, and that to me is the big differentiator. Is like as soon as you can trustlessly, deploy Bitcoin within an ecosystem, that makes a Bitcoin L2 very fundamentally different from anything else you could use.
Yeah, I think that's one of the major potential differentiators for Bitcoin L2s is much better trust assumptions in theory. Possibly like some new use case that is uniquely possible on a Bitcoin L2 that's not on the EVM or non-EVMs. Or potentially even, I think someone could potentially be very successful in just being more Bitcoin aligned from a narrative perspective and sort of capturing mind share from the Bitcoin user base in a way that something this EVM or that already exists hasn't been able to do.
Yeah, and I think this is a bit of a timing thing. I saw this interesting discussion on Twitter a little while back with Matt Luongo and I can't remember who it was, one of the guys from Alpin, but they were basically debating like which is more secure, TBTC right now or BitVM bridge the day it's launched. And Matt was basically making the argument like TBTC has been live in the wild, battle tested for years on end. Inevitably, BitVM and OpCap mechanisms, even though we're so excited about them, it's going to take a few years for these to harden effectively as tools. And so, we've got maybe, on the order of a couple years before we're ready for that. In the meantime, wrap tokens and, using sort of trust minimized but not trustless bridges is really our only option.
Yeah, I think that's roughly how I think about it. Is like I'm very interested in BitVM design space, but it's just an unbelievably fast-moving target right now. If we were to start building it, it's not even clear. Should you build toward BitVM 2? Should you build toward BitVM 3 with garbled circuits? It's just every week there's something new. I think the way that we think about it for TBTC is at some point when it's sufficiently mature and it's working, we would definitely be very interested in upgrading our custody assumptions from the current honest majority to something like that. But right now, TBTC is the most Lindy sort of trust minimized Bitcoin bridge. I think this is a code base that's been running for 5 years with a significant amount of TVL under risk over time and a huge amount of bridge volume as well. So I think I would be very conservative in terms of when we upgrade TBTC to something like BitVM.
So I guess as we're slowly coming up on time, I just want to ask one more question to all of you, and that's, we've talked a lot about ecosystem building, Bitcoin L2s here, and to me, what I'm hearing in the most reductive sense is like a lot of you are trying to increase your distribution on chain in some way, right? And so my question to you is, in terms of off-chain distribution, we know that there are a lot of people very interested in Bitcoin, a lot of institutions as well, and they have less desire of getting on chain than like the average person in the crypto industry. What is the strategy you are all pursuing to getting like more off-chain distribution, if that makes sense? I saw something crazy this morning, which was like maybe Bitcoin DeFi protocols will start like buying ATMs or something. That's a bit of an out there idea, honestly, but.
So I think in terms of off-chain distribution, we think that custodians are really powerful distribution partners. I think they, you could see that with Babylon, a tremendous amount of staked BTC came through the custodian network. And so we're looking at custodian partnerships, centralized exchange partnerships. That's also where a lot of Bitcoin resides. But then two of the key selling points are price, so effectively the yield you can deliver, which I think is one of the most persuasive points for somebody to use these products. And you can see that was a huge part of the reason that a lot of people staked with Babylon was there was an expectation around the yield that was going to be realized. And so we think that the two key things you got to focus on are the price of your product, so what yield it's delivering, and then the availability, like how many places are there to find it, and then what can you do with it. So for us, it's been heavy emphasis on who has a lot of Bitcoin under custody, whether it's a centralized exchange or a custodian, and then and then what are the realized yields on the Bitcoin. And so obviously that's not something we can control. But it is a big part of the pitch that comes through, particularly when you're dealing with these larger institutions that have mandates, whether it's a foundation or an asset manager or even just a high net worth family office.
Yeah, I think I agree. It's looking at who has distribution already. So that's custodians, centralized exchanges, wallets, and maybe a handful of other types of players. I think we're also going to see a huge amount of growth in just making it super easy to deploy Bitcoin and get a yield. So like this is where vaults are going to come in, and I think we're going to see a huge amount of growth there, where right now if you want to use a lot of these products, it's still pretty complicated. You have to have your own wallet. You have to be able to know where to go in terms of the particular DApp you want to use. If you want to go to Aave, you have to first you have to bridge using TBTC or Lombard or something like that. Then you have to take your token and go to the end application and borrow against it and loop it or do whatever you want to do. So I think just these one-click deploy, deposit and deploy and earn a yield, I think we're going to see a huge amount of growth in that, just making it dead simple for someone who's already not necessarily DeFi native, but either already has Bitcoin or is interested in getting access to Bitcoin and just generating some kind of yield on that. And that's basically, they don't want to think about everything that's happening under the hood.
Yeah, totally agree with everything that was already said. Maybe one thing I'll add was yesterday I was on a panel and we talked about the idea that users and institutions, Bitcoin holders are looking for yield, but even more so they're looking for minimization of a risk. So right now a lot of Bitcoin holders are very comfortable with risks that they experience with centralized institutions and centralized exchanges, and to the extent we can bring that sort of security they're comfortable with an element of on-chain participation through custodians being one of the biggest distribution channels for doing this. This is going to onboard Bitcoin a whole hell of a lot faster. And yeah, Babylon was kind of an interesting case study here. I don't think custodians are notorious for moving really slowly and, if anything, charging really, really high fees to get integrations. But the second customer demand comes knocking, they move really quickly. I think Babylon must have been one of the fastest that we've ever seen custodians integrate sort of an esoteric on-chain mechanism directly to their clients. So it can happen. We just sort of have to create both the minimization of security, and then I think using yield as persuasion, I think is pretty spot on.
I was going to say, we're buying gas stations in the Midwest. We're rolling them up. We're using our treasury for that. Just fucking. I don't know who's buying ATMs, but that's very very unique. But I think for us, we see core as there's two sides of the business. There's the yield product, so non-custodial staking, where you earn block rewards for securing the chain. That has a lot of more product market fit, especially with institutions. It's scaling really quickly. There's 5,500 Bitcoin stake growing, and there's great tokenized products like LSD Bitcoin and Maple growing and building entire ecosystems on that, and institutions love it. And it's also integrated with a bunch of custodians, just like a lot of these Bitcoin staking products, because there's a clear demand for that product. And then on the chain side, it's a much longer term build out where we see a lot of fit on the staking product, and then we're investing a lot on the ecosystem side, but we think that's going to take a much longer time, kind of per our discussion as we talked about with Bitcoin utility on chain. It's kind of like a crawl, walk, run. So we're taking more time there, being more thoughtful about how that ecosystem is going to be built out. And but what I'm saying is we're focused a lot on kind of putting the foot on the gas on the institutional yield product, because the PMF is so strong there.
That makes a lot of sense. I guess since we're coming up on time and we just have a little bit of time left, I do want to just shoot one more question to you all, and which is, for the next year, what is the goal that each of you are pursuing most for your team? And try not to be super reductive and just say growth or something, but what vector specifically are you guys looking for? What's your North Star?
For us, a couple of the key things we look at are overall TVL growth. So overall target to be 1 billion in the Bitcoin yield product. The key milestones though, how do you actually translate that into actionable steps, would be key custodian partnerships and integrations, and then the launch of a DeFi LST version of this, so LST BTC, so that we can start to get the DeFi growth channel humming.
For us, the North Star is bridge volume. It's closely related, or correlated at least with TVL, but really where we monetize is bridge volume. So when people are actively going across the bridge, either mint TBTC or redeem back to native BTC. How we're going to get there, it's basically just making TBTC available in as many places as possible where there's demand to deploy Bitcoin. So that means beyond just EVM L1, on EVM L2s, on non-EVMs, on Bitcoin L2s, and then also importantly making it, from a UX perspective, much better than it currently is. Right now, if you want to use TBTC on, let's say, Solana, you have to bridge from Bitcoin to ETH1 and then bridge again to Solana. So we're very focused on basically removing that middle step, so you can take your Bitcoin directly mint to Solana or to wherever you want to go, and then also in the reverse, get TBTC on whatever ecosystem you're involved with and directly redeem back to native Bitcoin without having to worry about anything that's happening in the middle or how that's working on a technical level.
My personal biggest focus for Lombard is the transition of Lombard as a company focused on yield to a company focused on utility. So I talked a little bit about the Lombard SDK, with the idea being there are so many different ways that people want to utilize their Bitcoin. Lombard is going to give developers the tools to do this. So bridging Bitcoin, staking Bitcoin, distributing Bitcoin via an automated vault. Any of these and all of these, I think, are in the pipeline. Just a matter of Lombard being a problem solver for those who want to build with Bitcoin. At the end of the day, we're all DeFi companies. We're sort of, if DeFi continues to grow, there'd be no reason that Bitcoin DeFi doesn't continue to grow sort of exponentially. I think probably at a higher rate than other assets. So if Bitcoin's going to end up being the foundation, or rather a foundational asset within DeFi, it's going to need sort of a tool set to work with.
Nice. I know we're short on time. I'm pretty cut and dry with these operational metrics, but on the staking side, it's 10,000 Bitcoin dual staked. Many levers to do that, most notably with Maple, and going after these treasury companies. And then on the ecosystem side, we want to be top 10 in terms of TVL and users, unique active addresses. I think on the address side, we're already there. But those are kind of the key. And there's a lot of things that go into that. On the eco side, we're pretty excited about, this new CEO program where we're going to bring folks in to build a few key pieces of infrastructure on the chain. So excited to kick that off as well.
Awesome. Thank you, everyone. If we could give a round of applause for our amazing folks up here.